All right, good morning and happy Monday, everyone. This is Taylor getting the party started for January 22nd. All right, give me a quick sound check here in the Essentials room, and we should be good to go on the YouTubes. Good morning, Jay. Good morning, Tony, Briggs, Chaz, Miss Lorna. Good morning, JK. All right, y'all. So, for those of you in the Essentials room here, I'm going to take you through a quick pre market prep, show you some squeezes, show you a couple day trade setups, and then later today at 10:30 Central, I'll be back in here for an hour of trading. So we'll focus a bit more on the swing trade side of things here in the pre-market, and then when I come back at 10:30, we'll shift the focus to some day trades. All of which begins and ends with the squeeze. So we'll start here. Anytime you're in a strong market, lower time frames will end up very extended. So the hourly charts are overbought. You've got a lot of overbought daily charts. Even some of the weekly charts are overbought. That always implies there could be a pullback. Right? Things could come back to support. We get a little bit too extended. Things might trade sideways. Bigger picture, do not forget, and more importantly, don't feed the monthly squeeze. I know our lower time frames are extended. We might be at a place where probabilities-wise, it's time for a good pullback. Everything about the monthly squeeze points towards the market wants to go much higher. And there might be some pullbacks, so nothing goes up in a straight shot, but do not forget your monthly squeeze. You would not have wanted to have fought it back there. You didn't want to fight it back there. You didn't want to fight it back there. We can go all the way back to 1970. 9.9 times out of 10, fighting the monthly squeeze is a very bad idea. Rather, take that monthly squeeze. That's your best friend. That's the wind at your back, the wind at your sails. But then on the board here, everything looks very bullish. S&P's, QQQ, Dow Jones, 10 out of 10 on the monthly chart, 10 out of 10 on the weekly, and then from there, everything's close to a perfect score. And then we got a little squeeze action. We have a handful of daily squeezes, the Dow, the S&Ps, and the RSP. And then I think the two big ones to watch here, as far as context, the monthly squeezes on the IWM and the RSP. Those two I think could be really interesting. Where if you take the small caps here, which mind you, it's the weakest of the indexes. QQQ a lot stronger, the S&P is a lot stronger, the Dow a lot stronger. However, on that IWM monthly squeeze, we are getting that slingshot signal. So jumping back to the S&Ps real quick, we got the first monthly slingshot signal back here in, I think it was September. No, I'm sorry. We got it all the way back here in April. Big old whopping monthly squeeze. And then we're getting that blue arrow. The blue arrows are early heads up. We're eventually going to get the green arrow. The green arrow is your heads up. Price wants to go towards that +3 ATR target. Blue arrow turns into a green arrow. Green arrow turns into a push towards the upside target. That worked beautifully on the S&Ps. That worked beautifully on the Nvidia weekly squeeze. I'll show you that bad boy. In an uptrend. Pulls back to support. We're getting the slingshot arrows. Again, there's your heads up. Eventually, things should turn to an official buy signal, which you eventually get right here. And then perfect, you get the official buy signal. Where should price go? Price typically is going to boogie up there towards that big green line. So jumping back to the small caps, the weakest of the indices. A bigger picture, guys, if the small caps can join the party, it just points towards a stronger market. And I think you want to continue to trade the Nvidias. Keep trading the Nvidias, the AMDs, the SMCIs, the Googles, the Microsofts. Keep trading all the big boys. But as far as the quality of the overall market, If they can get the little guys on board, and that blue arrow eventually turns into a green arrow, and that green arrow eventually triggers a push towards 240-ish, it's just going to lead to a stronger market. And then I think equally as important is the RSP. And frankly, the RSP gives you a more, we'll call it realistic look of your market. It's all the stocks from the S&P 500 on an equal weighted basis. So unlike the S&Ps or the SPX, there's no influence here from Google or Nvidia. MasterCard is just as important as Apple. And Google is just as important as a Caterpillar. The RSP itself, right, everything being equal, also has that slingshot squeeze. So in terms of the map of the trend, we're pretty much right here, right? And we're right here, and we're right there. We've got an uptrend. We've got a squeeze. The indicator's cranking out that blue arrow. If the blue arrow can turn into a green arrow, what should we expect? Blue arrow turns into a green arrow. We should expect a move towards that big green line. So that points towards potentially the market gets much, much stronger. A big part of this push has been tech, or really a huge part of this push has been tech. It's been the semiconductors. But again, if the small caps and the RSP can fire a monthly squeeze, it kind of points towards the party's just getting started for the bulls here. So you look at things like the financials. And admittedly, not as sexy as Nvidia. I don't think as sexy as a Google. But the financials also have that slingshot squeeze. So you look at a few monthly charts, you look at a few weekly charts. For a lot of things in the market, the party's just getting started. And again, expect pullbacks. Nothing goes up in a straight line except Nvidia. So expect pullbacks, expect chop, expect brand new daily squeezes, but bigger picture, everything on the board, from the spiders to the Qs to the small caps, points towards we should be looking for more upside. And I am not going to fight that. Now, for this week, pull the S&Ps up here. All right, just watching the futures here. We got a 5-minute squeeze in the futures. I would like to buy it. But for this week, you want to watch your daily squeeze here on the S&Ps. Again, there's that slingshot signal. Clean breakout. A mighty clean breakout. She trades at a brand new all-time high. I think everyone and their mom was looking for the same target. Everyone looking for a push towards 4,900. So mark that up. We'll drop a big old thick green line up here. Up yonder at 4,900. All right, and now we're going to play a very simple game. The game, my friends, is called over-under, or above and below. All right, I'm going to mark up the previous highs here. Yeah, we'll call it 4,800. And from here, very simple. If they can keep price above the previous highs, so keep price above that 4,800, daily squeeze should fire. When and if it fires, we should see 4,900. So from there, what you're looking for is a good entry above 4,800 on a good trigger. A good trigger meaning your lower time frames confirm that push higher. So for example, we pull back a bit this morning. Price holds above 4,800. We get a fresh 5-minute buy signal. We get a fresh 15-minute buy signal. I'm looking for something like that to jump in and then try to play for that push. If they break it back under 4,800, maybe a little bit of patience. At that point, maybe we're buying it down here closer to 4,750. But point being, a daily squeeze in an uptrend with a slingshot signal, typically going to be a nice combo for the bulls. All right, let me check out this 5-minute squeeze here real quick. So for the day trading session later, my only focus is going to be on the upside. I am not looking for shorts. Reason being, we have a daily squeeze. That looks like she wants to fire to the upside, and then the 4-hour chart is bullish, the 2 hours bullish, and the 1 hour is bullish. So I don't want to fight those bigger time frame buy signals, nor do I want to fight that daily squeeze. So for a day trade, what I would look for, some sort of entry off a lower time frame that's in alignment with my bigger time frames. Better yet, could I find a 5-minute squeeze, maybe a 15-minute squeeze that might actually trigger the daily squeeze? Little something on a lower time frame that can lead to a little something on a bigger time frame. So if we check out the 5-minute squeezaroo, 5-minute squeeze break short. The big three score is only a 1. My 1 minute is neutral. My 2 minute is bearish. So I don't really have a good 5-minute setup, nor do I have a trigger. If the 5-minute squeeze was a perfect 10 out of 10, and then the 1 minute was bullish, the 2 minute was bullish, then you have to buy it. Otherwise, no setup, no trigger. Now, my whole thing here with my day trading, my futures trading, risk reward. That's the only thing I care about. Do I have a good setup? Do I have good multi-time frame alignment? And at minimum, am I risking 1 to make 5? I really want to push it closer to risking 1 to make 10. So a big part of that is being really aggressive about moving your stops to break even. A good example is I got long this morning on the 2-minute squeeze. I got long the micro futures in the 2-minute squeeze. So I bought it back here at 48.87. So I'm taking my entry right here. In the 2-minute squeeze, as soon as I caught that push, I moved my stop to break even. What I'm looking for is a push towards 4,900. So on $13 of potential profit, as soon as I catch a push, I want to make that a free trade. And I might get shaken out, so I might have to take 5, 10, 12 trades to catch that push. But if I can get out for break even, I think that's a beautiful thing. And a really good feeling. You buy it, you catch a push, you move up that stop. From there, it can't hurt you. It might irritate you, but it can't hurt you. And then price pulled back, and I got stopped out, I think, somewhere back here. So you got to keep it tight. If when I'm right, I can make $1,000, and when I'm wrong, I only lose about $100, guess what? I don't need a 70, 80, 90% win rate. I can make do with a 20, maybe 30%. But all right, so that's that on the futures. So again, do not fight your monthly squeezes. Keep an eye on the IWM. Keep an eye on the RSP. If they join the party, that just simply points towards a stronger market. All righty. Now for a couple of swing ideas here. And the one thing that's going to make the next few weeks a little bit tricky is earnings. There's no lack of stocks that are strong. What there is a lack of is a great looking daily squeeze, a great looking weekly squeeze without earnings coming up in 5 or 10 days. Got to dance around those earnings. But one name that we're currently long is Nvidia. So for all of you in my mastery, here's the game plan. We are going to gap up here into our $600 target. And for what it's worth, guys, Nvidia is mucho extended. It trades above that daily 3 ATR, which maybe happens like 5% of the time. And then even on the weekly chart, which of course is the star of the show, that's extended. So it's not too often that your daily chart and your weekly chart are going to trade above 3 ATR. Doesn't mean we have to pull back. Doesn't mean Nvidia can't go up another 10, 20, 30, 40, $50. It just means if you're buying Nvidia up here, you are not allowed to complain if things pull back a bit. If lightning strikes, the unthinkable happens, Nvidia pulls back a few points. If you're buying it up here, should not be the end of the world. Better yet, if you're buying Nvidia up here, in the back of your mind, you're thinking, come on down to earth, baby. I'll take a nibble up here at 600, but I can take a good chunk at 550. I can take a much bigger chunk down at 525-ish. So as always, be careful when you're buying up here at these extensions. But like I told you all a few weeks ago, this is a very, very powerful combo. October, November, December, you're getting all that big buildup of energy. It can't take place in a better spot. Build up energy, build up energy, build up energy right underneath the previous highs. You take off the top, you've got no ceiling. No moving averages, no previous resistance, nothing to stop the bad boy. So we took our first trade back here in the squeeze. We caught the breakout. We caught the push to 550, at which point we took our profits, and then we opened another trade. So we are on Nvidia trade number 2, numero dos. The target here for trade 2 was $600. So we're going to hit that target this morning. We are going to take profits at the open. We're going to take those profits, roll out to another trade. And I've got to give that a little bit of thought. But what I'm thinking for the new trade, something up here at 650 for March expiration. And keep in mind, when Nvidia moves, this thing can move. The weekly average true range is about $40, meaning 2 good weeks of work from here, you're smooching $700. So I'm going to price a few things out, but the goal here was find it in the squeeze, try to nail trade number 1, and then as the squeeze fires, just keep parlaying those profits. Ideally, we can turn it into 4, 5, 6 plus trades. But this morning, we cash out on trade 2, and then we'll figure out the next trade on Nvidia. Now, what I would like is I'm going to keep taking the free trades, but for a bigger position size, I would need a pullback. So I'm going to keep on parlaying profits, rolling out the profits. But if we can actually get a legit pullback, then we can put on a trade with much bigger size. A little bit of meat on the bones. But Nvidia is a beast, and then Google, who's going to open around 147. We finally started getting the breakout last week. Very much like Nvidia. September, October, November, December, and now January. Chop, chop, chop in the weekly squeeze. I would like to think the breakout on Friday, really on Thursday, but I would like to think last week's breakout, earnings. Earnings is the only tricky thing here. Earnings are on the 30th. Putting earnings aside, I would like to think the breakout above 143, the daily squeeze firing to the upside, that should open the door for a push towards that 150-ish. And that's what we've been looking for since we bought it, I think, back around Thanksgiving. We're buying Google somewhere back there. So in terms of a new idea for a fresh trade, little tough with earnings coming up. Do with Google what you may. Putting earnings aside, I think it's one of the better looking weekly squeezes in the entire market. A lot of similarities here between Google and Nvidia. Looking for 150 to 160. Pretty straightforward setup. Earnings, of course, makes it a little bit less straightforward. But Google is a beauty. And then one I do want to show you here for this morning. Nothing I would touch for a few days. I wouldn't touch it until after earnings. But I do think there could be an interesting trade here from the Netflix daily squeeze. And I want to draw comparisons between this and the Microsoft daily squeeze. In an uptrend, pulls back towards the rising 50. Whoops. The rising 50. And now it prints a brand new daily squeeze. So Microsoft was very much the same pattern. In an uptrend, pulls back to a rising daily 50. You got yourself a nice little squeezola, and then boom, off she goes. What I'm going to look for in Netflix is after earnings. Can we catch it anywhere near that daily 21? Best case scenario for me, and it might be a little unlikely, but best case scenario, after earnings, Netflix opens up somewhere near 480, 490, at which point earnings is behind us, and then we can potentially trade that daily squeeze. And y'all know the drill. You find your squeeze, you get that near that 21 EMA, now you've got a setup. To trade that setup, now what do you need? Now you need a trigger. So we'll jump back to Microsoft, and we'll study that trigger. Before, during that big push off that daily 50, what should my lower time frames look like? My 2 hour, my 4 hour, my daily, or not my daily, my 15-minute. And we all know what they should look like. Before and during a daily squeeze firing to the upside, what's the big 3 indicator doing on their lower time frames? 5-minute is green, 15-minute is green, the 30-minute, the hourly, you're getting that alignment. You've got compression and you've got alignment. One hell of a combo. So we'll come back to Netflix later in the week, and then along with Google and Nvidia, I am holding my Tesla, which at this point is pretty much in the graveyard. Now, like I mentioned on Nvidia, we're taking our profits and we're putting fresh trades, right? Trade 1, trade 2, trade 3. Tesla, we're on trade number 2. Trade number 2 might be a big dud. It's kind of looking like it might be a big dud. But we're playing with profits. So we're taking trade number 1 all the way back here. We caught that push into 250, took those profits, and then we opened up a 300, 310 debit spread for March. When and if you want to roll out your profits, you have to do that into a good setup. When we did it on Tesla, it was a beautiful weekly squeeze. Looked just like Google, looked just like Nvidia. No such luck. If you can latch on to a bigger monthly squeeze, a bigger weekly squeeze, and you can catch things early, trade number 1 might turn into trade 10. Or trade number 2 is going to be the end of the road. So some are going to work out like Tesla. You take your first trade, you cash out, and then trade number 2 just dies on you. Some will work out like Nvidia. Trade number 1 pays for trade number 2. Trade number 2 works, that pays for trade number 3. And in a perfect world, Nvidia rallies into $10,000 per share. And I'm just playing with profits until my time here is up. In a perfect world. But all right, y'all, there's the meat and potatoes of it. Very, very, very strong market. A lot of bigger time frames pointing towards the party's just getting started. But we can't fool ourselves. Always going to be room for a pullback. There's always a chance for a week, 2, 3 weeks of chop. Operate on a day-to-day basis while respecting that bigger time frame. We'll wrap it up here, and then I'll be back at 10:30, 10:30 Central. This time might be different. We're all going to find out, but this time might be different. Or it's going to work out how it's pretty much worked out 90% of the time throughout history. Meaning if a monthly squeeze just fired, do not freaking short that. Right? Like, it's just not a good idea. Not a good idea back there. Not a good idea back there. All right, I'll take you through the time machine. Let's do this. You would not want to have fought it back here. Bad idea. Fighting it back there. Bad idea. Let me take you guys back to the 80s here. Was fighting a monthly squeeze a good idea back in the 80s? I wasn't even born yet. I was just an idea. Well, if you fought it back here in 1980, you're out of business. You fight it again in 1984, 85. You're taking it on the chin. 1991, terrible idea. 1993, not a good idea. Since 1970, there's only been one occasion. And that occasion was right back here. Had you gotten short back there, eventually you caught a flush. Every single time except that, you're getting steamrolled. 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 Flattened again and again. But all right, y'all, I'm going to hit the road here. I got to run a quick errand, and then I'll be back in this room in 2 hours at 10:30 Central with a bit more of a day trade focus. So let's just check that 5-minute squeeze here. Probably don't have a 5-minute squeeze at this point, but we shall check. And then any questions I missed, I'll answer those when I get back later. All right, so pretty straightforward stuff here. Do my bigger time frames say I should get short? My monthly does not. My weekly doesn't. Nor the 4-hour, nor the 2-hour, or the 1-hour. They tell me to get long. Because they're bigger time frames, they're going to have a bit more. Bigger time frames are bullish. I want to get long. From there, it becomes a lower time frame thing. Bigger time frames say I can get long. Do my lower time frames tell me I can get long right here, right now? I've got a 5-minute sell signal. My 15-minute is neutral. I've got a 2-minute sell signal, and I've got a 1-minute sell signal. Bigger time frames tell me to buy it. Lower time frames are not giving me a trigger to buy it just yet. And you could get short here. My preference is let them pull back, and then I'm looking for that turn. The 1-minute goes back to bullish, 2-minute back to bullish, 5-minute back to bullish. Now if I can find a squeeze, I am in business. It should all look a little bit like that. My bigger time frames are bullish. My 5-minute squeeze is bullish. Pop open the hood, 3-minute bullish, 2-minute bullish, 1-minute bullish. I don't need much more than a good 10 points. So that'll be focused when I am back at 10:30 Central. All right, y'all. But I'm gonna gonna hit the road here, run a quick errand. I got to get some salt, not for my steak, but for my driveway. And then we're back at it in a few hours. So as always, y'all, thank you for your time this morning. I appreciate it. Looking forward to an hour of day trading later. And, here's the thing. If we don't have a good trade, we're not going to do crap. If we don't have an A-plus setup that offers a risk 1 to make 10 kind of risk reward, we're not going to pull the trigger. Big part of my discipline this year, if it's not that trade, I'm not taking it. If it's not an A+, I've got no interest. It might even be an A-. That thing's 1 inch away from perfect. I can't do it. Gotta save my chips for those A+ setups. A+ setups will lead to a higher win rate. But I don't care about my win rate. I care about risk reward. The combination of the two can lead to good trading. The quality of the setup can lead to a good risk reward. The quality of the entries and the exits does not need a good risk reward. Can I trade a 70% probability setup in a fashion where I only need that thing to work 10, 20% of the time? That is the goal. But all right, y'all, I'll see you in a bit. Thank you as always.